following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman. This is the 31st day of August, and in fact the monthly chart is about to close, and the candle is going to be very interesting by end of the day. And most importantly, we had a Friday close which gave us the weekly, so we can discuss things in a little bit more detail this morning. And thank you for being here. Thanks for listening to all those shows here at TFNN from 8 in the morning. We just keep going right through until 5 or 6 o'clock every day. And let's go through things in great detail. The E-minis are down 21. They were down 24, 25 last night, and they came roaring back. In fact, this morning's high went all the way from the low of 1959 and 25 cents last night to 1987. We've had some pretty big moves here, almost 30 points. Now we're back down minus 23 at 1967. This weekly candle that I'm showing you right here, if you're looking at Tiger TV, remember daily on the left, weekly on the right. Usually it's the monthly on the weekly in the middle. Usually it's the monthly on the right. But in this particular instance, I like to show the 120-minute chart. Why? Because in the show, we have a lot of people that are doing intraday trading, and they want to see where the parameters are. Parameters are really quite important at this stage. The low so far today, 1962.25. If that's taken out, we're at 1968.50. That would suggest that there's a retest of the 1959.25 low that was made at 8 p.m. last night. And if that's taken out, you've got an arch formation that says, okay, the next level to watch is 1944.25. My thinking here is that this is the first decent pullback we've had, plenty on a closing basis. There was one back on Tuesday of last week, but that didn't take out the low of 1831 in the E-mini in September. And in fact, we came roaring back, and we went from 1831 to 1992. That is just a monster move. But of course, you had a monster move down. So it's a recovery, a retracement mode. And most importantly, at 1968, at this particular point, you're right on actually, no, you're just a tad below the 1962 weekly 200-period exponential moving average. So now let's go through the numbers. There we are, moved it away, and we'll do them one at a time. Beginning of the week, it's always nice to do this. The Dow's down 139 at 16,509. It turned the 16,593 area, 9-period moving average, into a repellent zone. We had held above it for 2 days. This time we're coming down. And in fact, this is a really good chance that we finally make a peak A. This peak A says that there's also a chance that you could have, remember I talked about 136? You could have, in this particular instance, more than a one-day consolidation or an intraday consolidation. They've already had a bounce to the upside, so the Dow is at one point minus 80s. Now it's back to minus 141. It's saying this is a little bit more difficult. Yes, there's end of the month buying. Yes, there's mutual fund activity, etc. But the main trend at this particular point remains, I believe, to be on the upside in the shorter term. What do I mean by shorter term? I'm talking weeks. I'm talking from the low that was made on Monday, a week ago, 1,000 points down. It's the 15,371 level on the 24th. I believe that there's still enough residual strength to have maybe a 1 to 2. I'm not sure it's going to be 3, but at least a 2-day consolidation here. And then there should be an attempt to get above 16,669 in the Dow. Why am I making such a big deal about this? 2 reasons. One is today's going to give us the monthly close, and the monthly close has a Chapman Wave Roman candle. Chapman Wave Roman candle, let me show you something really interesting, is a potent instrument. Why? What does it mean even? Well, back after the October high of 14,198 made way back in 2007, the very next candle was Chapman Wave. I used to have it printed. I took it away. Chapman Wave Roman candle. And what I'd said is two things. One is that there is a close below the 9-period exponential moving average at any point. We will go to a sell mode in the weekly and a sell signal in the monthly chart, and that will suggest very strongly that we're going to go down much sharper, number one. Number two, this candle, where you open it, especially from near a top, where you open, don't make more than a fractional new, let me just show you this here. You opened at 13,924.16. That was also the high. That's a monthly chart. I mean, that's really unusual. And more importantly, the Roman candle has just the tiniest little wick. This didn't even have a little wick. And that wick starts to sail way down, and then it closes on that bar. This is a monthly bar near the middle point of the whole candle. That's what I call a Chapman Wave Roman candle. It has implications at the bottom, and when it's after a sharp down move, it has positive implications. And a candle like this near a top of any particular time frame has very negative connotations if a whole bunch of things happen, and those things are really quite simple. It's where the price is intra-bar. If it's more than halfway into the wick, the lower part of the wick, that says it's probably going to test and break the low of that particular candle. Of course, that low was in 11,634, made in January. Oops, wrong candle. That was 12,724, made in November, and we went below it in January, and January set up yet another Roman candle. 2 Roman candles in a row. Be careful. The third one says, well, watch out, you're getting to the acceleration phase. Doesn't say you're going to turn around, but it says this is different to the others because this is where you've got to start looking for a bottom. And that bottom eventually came in 64.69, March of 2009. Why am I thinking that this is just a little bit different at this particular point? Because the MACD and stochastic are very, very negative. The on-balance volume, though, has just turned down, and the histogram has started to become quite negative. This is the monthly chart, and the relative strength indicator is way down. It's touching 50%, and that's usually not a good sign. So how do I get this little bullish moment that I think is unfolding right now? Because the rebound from the 200-period moving average in so many of the indices and key stocks, in this case 15,600, and still went 230 points lower, but look at the way it closed. It closed right at the top of this candle. That says this wick is going to become highly sensitive to a down move, but the resiliency of the stochastic turning up at 23% after going under 20% says that at least for another week, maybe a week and a half, we should attempt to go higher. But now today's action is starting to tell me that I might be correct in suggesting that the upside now might not make a D in the daily. I don't know yet, but I'm saying it might not, but it certainly has some upside, and that upside might have much lower highs to come. The major work of this retracement rally has been done. All right, enough with that. So 16,526 right now. I believe we will go above 16,670 to start leg B. And then if this candle should be the max that you see, 16,990. I'm not even sure we can get there. Let's go one step at a time. 16,590 needs to be broken before we can even be talking about the 16,600s. All right, S&P. SPX, let me get this done before we go to the break. S&P is down 13. Daily is probably making a peak A. Look at the weekly chart, a really good candle. That made a left side, right side price time match in a shorter period in the inside Chapman Wave inside wedge to the 18,067, I believe, level. The 18,082 level. And then the major low of 1820 made on October, the week of October the 17th of 2014. That will still be full, but it's going to take a while before we do that. And there's that arch formation that I'm anticipating will unfold in September. So, well, let's go through this. Near-term parameters here at 1976. good year. And the key support now, intraday, will be 1972 to 1968. You break 1968, it's a different ball game. Then you get your 2, maybe 3-day consolidation. Upside, I'd say, upside based on the 120-minute chart. You're still waiting for a leg D, so it's going to be really important that the 1682 to 1686 level is taken out in the next 2 days on the upside. All right. And then I believe we'll make leg B at 1993.49, 1 penny above your peak A. All right, let's go to the QQQ series. So the comp index is down 24. The QQQ series, 1, 2, 3, it's right there. 1, 2, 3. Look how nicely it's holding. 105.06, only down 0.56, down 0.53%. A little bit better than the Dow and the S&P, which are down 0.63. You're looking at, look at that candle. That is really a very strong candle. Hit that exactly. 84.74 was the low. 85.50s was the 200-period exponential moving average in the weekly. I like this just as a, how can I call it? How do you draw the dashed support line on the S&P? Mr. Bull, let me get to that in a moment. Where are we? You're talking about the dash support line in the S&P. This one here. I took the lows, and I took the most hit lows, and I just drew it in, and we came in 1 day late on the left side, right side price time match. That should have been green, that over there. And that was a really long one. That went back, way back, and then it pierced it decisively. Look, it goes all the way back. So you know what? Let me do that a little later in the show. It's a good question. Oh, the daily. All right, I'll show you in a moment precisely. But let me just do 2 things now. I want to just say gold. Gold is at this particular point. It's holding okay. It's down 340. I think these arch formations are just continuing. I just don't see anything at this particular point. You know, the Fed comes out on Wednesday. This is I don't know if it's their last opportunity to raise rates a quarter of a point. I don't think it's going to do all that much to the overall market. If it's more than that, it will be. I got a feeling they're just going to kind of back away. They're going to say, hey, it's a little uncertain now. We don't want to, after all this, we don't want to create more uncertainty. This is my thinking. But look at the dollar. Now, I've heard reports that if the Fed raises, the dollar's going to scream to the upside. You know, I think the dollar is under a different kind of pressure here, and the dollar's holding very well. It held the 9-period moving average. It's at 96.24. I can just tell you that if the dollar at any point this week, by Thursday, let's put it this way, if the dollar is held, gone into the 96.70s or higher, but holds the 95.70s under any selling pressure, and gold does not scream to the upside, in fact, it comes down, the dollar is going to keep moving in this sideways pattern. So that's there. The crude oil is down 57 cents at 44. Bonds are, where are bonds? The TLT is up 13 cents at 122.40. I'll be right back. Basil Chapman, and we'll take our first caller. We've got Scott in Safety Harbor straight after this break.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. And let me just finish putting this in here because that was my first one. Okay, so I'm going to answer Mr. Bill in a short while. He asked me about my left side, right side, and how I got my dashed line, Chapman Wave inside wedge. I'll get to that. I want to go to Scott in Safety Harbor. Scott, how are you?
Good morning, Basil. I am interested in the subject that you were just talking about, the Fed movement and so forth. And what do you think? What are the charts showing for BAC? You know, you've got something going on with the CEO right now. You've got the Fed decision. So I just...
So the Fed decision is on September the 16th, Danny in the Den tells me.
Do you think that will help the banks or push them lower?
I tell you what I'm thinking here. I did an analysis.
I'll be honest with you.
I did an analysis over the weekend, just a very brief one. I did a lot for my subscribers in many areas, but the banks, I just sort of ran the charts, and I was looking at them just to see where they had come from in the rally, and a majority of them. Let me just double check here because I think I forgot about J.P. Morgan. Yeah, a majority of them. Although if you were looking at the candle, that incredible candle of the monthly charts, look at this J.P. Morgan chart. The monthly candle for August has a high of 69.42 and a low of 50.07, smashes through the 200-period moving average in the weekly chart. But you see, I have a peak F, and a peak F is a serious. I mean, the last peak F back on the the 2nd of January at 63.49, took it all the way down to 54.50. This one, of course, because of last Monday, it went right through the 200-period moving average of 54.32, and it went to the 50 level, 50.07. So the monthly chart is saying to me two things. One is the 9-period moving average of 64.14 is very important. I'm just spending a little moment on the bigger banks because I think that's just going to give me a better sense of what to answer you in terms of
overall picture.
The shorter term, and I'm talking shorter term going into the 16th, so that's what we're looking at together. See, Wells Fargo as well, which is really a really well-run money center bank, trading at 53.42, only down 12 cents now. And it's also in a leg F, and probably by the end of the day, I'm going to have to call this a peak F. Now, here's what I'm thinking. On the shorter term, if I'm correct in assessing what I've been looking at, and I showed my subscribers over the weekend, chart after chart after chart, it suggests that on the shorter term, a huge chunk of the down move, that acceleration, the 500-point acceleration on Monday after the 500-point decline, that's what I expected could be a good give back between 500 and 800. The fact is that many of the charts have propelled higher and stopped at the 9-period moving average, and Wells Fargo is one, and Bank of America is another one, because 3 days in a row, that little black line that I'm showing there has been the repellent line. But look how well it's held from Thursday, Friday, Monday. Yeah, from Thursday's low of 1609.
Even the day you're talking about when things went bad there, it just pretty much held.
So now, so what I'm looking at, I think you've got your eye on the right kind of vehicle to be trading. You're looking at this for a bounce. Is that correct?
Yes, right.
Okay. I'm kind of in your camp. Now, what's very interesting is that Bank of America, BAC, trading at 1627, down just 9 cents, well, down 0.52, which is exactly the same as the Dow and the S&P. But it is holding. It's like a magnet. That 9-period moving average is like a little trolley car, and there's the rail line at the top, the electric wire. And as soon as it can turn that into support, that's going to be important. So the stochastic is rallying. It's at 46%. That's good. The MACD is the thing that it constantly reminds me all the time in the daily charts and in the weekly charts that I mustn't get too carried away on the upside. This is a bounce, and I think it's a bounce that does have legs. And when the bears finally say, you know what, we're going higher, and it'll take about a week to do, after the long weekend, maybe, if we can continue at least these big pop-ups from lows, I think that Bank of America is one of those that has the potential. It doesn't say how high it's going to go, but it has the potential to start a leg C, and that would be above 1645. That's 20 cents higher. That's number one. And then it has the potential to fill in the candle of, I think it's Friday a week ago, of 1666. So I'm thinking, and I know that you look at these shorter-term trades. It's not so much whether it's going to give you how much you want the trend. And my thinking here is that the trend on Bank of America, at least in the short term, is to make an arch formation. That arch formation should come in between 1671 and 1690s over the coming 3 to, say, 6 sessions, maybe 7 sessions.
Yeah, I agree totally, because, the day I was filling up the basket with Apple and Gilead in 92 and $100, I mean, Bank of America, like you said, just didn't go down.
So thank you for calling, Scott. Always
Platinum,
appreciate it.
grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back, and the question was on the S&P, how did I guess it was the support line. I think it was the support line. So the support line goes from the low of the 26th of the daily chart, 26th of March. It could have gone lower than that, but initially I'd done this. That was the 26th of March at 2,045.50. I used the little doji candle of 2072.14. That was in June. I think it was the 9th, June the 9th. And that gave you a left side, right side price time match, which was hit exactly to the penny. What was the low here? 2035.73, 2035.73, 2045. It went right through it. So it hit it more than to the penny, but on the exact day. And then I couldn't use that anymore. I didn't have enough left side, right side price time matches as a low. So what I did is I went to the weekly chart, and this is what I did on the weekly chart. I did not anticipate that we would go right down to the 1820.66 October low without some kind of an arch formation. So Monday's extra spike to the downside, stopping above it at 1867, was a little surprise to me in the rebound aspect and all. But the fact was that the left side, right side price time match, I'd gone to the low of the 24th of October at 1882. to the midpoint candle, doji type candle on the week of the 3rd of April. And then I went to the right side. And that took us to the 11th, the week of the 11th of September. That's next week. So we got there 2 weeks early. We broke it, number one. Number two is the inside wedge is the Chapman wave inside wedge is a technique that I use. Usually I choose the left side of a peak, and I use that top as the high point, and I make a diagonal line that takes me to my left side, right side, horizontal important support level, in this case 1882. That's how it comes out. So the answer to your question is I didn't get it on the daily. I did it in other charts, but not in the daily and the S&P, but I did in the weekly. And it broke it and it bounced. And that says to me that there should be enough residual strength. Now we're running, you're usurping energy. It's as if you're switching between, you're a hybrid. And we've used up the torque that you can get from the electric motor. Now you're going with the engine itself, but the engine doesn't have all that much gas. That's really what I'm looking at, if I can be descriptive. That's number one. Number two is, within this particular pattern, let me just give you the bigger picture. You see this long-term uptrend, even if I use that and I take it from there, it still cuts. We've broken key support levels, but you've not that is diagonal support levels. But the horizontal ones are the ones that you have to use when diagonals are broken. And you can see that in this particular instance, there is almost like a magnet effect that says, if at any point, it's 1978, and if at any point in the next 2 to 3 weeks, the S&P 500 index starts to break key support at 1935 to 1928, then that candle will be filled. And that candle suggests that not only will it be filled, but the low of 1867.01, let me put that in there, will be taken out, and all of a sudden you'll be going into something very different. Now, let me just show you this here. I did some work over the weekend that I showed subscribers. If I can just do it here, space to the right, let me just make it big, 23, here we go. Look, all of a sudden, you can see what I'm looking at. I'm looking at the end of the year. As this is a best case downside activity. A best case says that we are, because of this year of rotating through the sectors, it tells me that a chunk of the downside might have been accomplished. We've still got more to go, but in fact, we've made an internal low, and now we've got to wait for the residual low. This is extending it out. My other technical indicators and my other technical work suggest, based on the Dow, that it'll be more like October that we come back and retest 15,370. That's the way it's looking at right now, and that the 200-period exponential moving average of 15,600, that really would be a key. And if I was to give you a time and everything with the inside wedge, I'd say right there, somewhere in that range, somewhere in October, might be a little later. This is just my thinking, and we haven't even broken the close of last week, which was, it can't be 16,645. Yeah, 16,643, right there. No, that was the high. So it opens there, comes back, opens there and goes there. Okay, it was the open, 16,459. I'm sorry, that's what I really wanted. 16,000, there it is, right there, 16,459. That's going to be really important on a closing basis. Now, a couple of questions that I was asked, but let me do this. I'd like just for a moment to show you something that I think is absolutely important, because this is saying that the internals have, why I think the internals are just shorter term still have strength. GE, that was a great candle. The two great candles is at 2486. Hey, it was at 1937, 5.5 points higher. I like it. It's telling me that there's some internal strength, short term. IBM, lousy chart. Triple M, very lousy chart, but it's starting to show some improvement. And UTX is coming back, and that's my other indicator. And these stocks are saying, a chunk of our work to the downside has been done. We're going to go sideways for a little while to slightly higher, but then I think they come back and retest. But I wouldn't be surprised if a chunk of their work to the downside has been done. Let's go to Brent in Martinez, California. Brent, how are you?
Hey, Basil. How was your weekend?
Weekend was very good. Thank you. Oh, a lot of charts. That's all I can say. Beautiful weather and a lot of charts.
Good deal. I was calling about a couple of stocks that they seem to be ignoring whatever the market's doing.
Yes.
I actually own the one I called about. I have bonds on it, I have stock in it, and I have options on it, which is Peabody Energy, but then also maybe at the end you can look at Arch as well, because Arch is really good.
I was going to do that over the weekend because someone had mentioned ACI. And I thought, gotta have a look at that. And of course, in my opening call, we have one of the crowd of the in the copper area. It seems to be holding quite nicely, and I really do believe we've got internal strength. And those, we can have full moons, we can have all sorts of moons, etc. But something's going on that you have to look at in the market that says other things that are way more important are unfolding. And one of them is that the actual balance in the oil, the kind of, so BTU is Peabody Energy, but are they in natural gas as well as oil?
It's more coal, which is Arch coal.
Of course, coal. Why did I forget that? Coal. So you've got out of the blue. I mean, right here in August. Oh my goodness, ACI is up 19% today, up $1.64 at $9.85. Whoa, something's going on, and it's very important that you. Oh, thank you for bringing it to our attention. So, okay, let's go to BTU. Your first question. Your question is, I'm going to answer it in this way.
Can I ask you something real quick, Basil, before you get started?
Yeah.
I just want to make sure I have the count right. It looked like it put in that low at 99 cents, had about a 3-day move up to a certain level, but then that was never surpassed until August. So I think I have it as a leg C. Is that what you have in the daily?
No, this is very interesting. 99 cents was the low on July the 28th. It went to 0.99. Then it made an arch formation, talking about arch coal. It made an arch formation at A minus because it came down to 101, and then inside it had a peak A on the 5th of August at 117. It had a peak B on the 10th at 126, peak C a little higher at 127 on the 12th, and then I put in a D. Now I've put in an E/B because the MACD is very strong, stochastics at 80%, and there's a lot here that suggests that there could be a pullback, but even if it pulls back from 264 down to the 9-period moving average of 196 and then rallies again, that would be a high-level consolidation. So I'm favoring probably more to the B than the E. And even if it's an E, it still would probably need F to go. I like it very much. I like the fact that the leg A in the weekly chart has taken 1, 2, 3, 4, 5. 5 weeks since the week of July the 31st, and it's broken. Oh, no. 273, 270. It has almost broken the resistance that was way back on the 26th, the week of the 26th of June in the weekly chart. And for the first time, I've got a V-shaped formation in the on-balance volume, and the MACD in the monthly chart has a much more positive, higher MACD than the price would indicate. So I used to have this all notated. It's maybe time to do it again. A, B, C. It made a peak D in the monthly going to the April 2011 high at 73.95 with a round number open of 73. And it did come down to, I would say, came down a little bit, 2.99, 99 cents, under $1. Unbelievable. That is a, 97%, 98% decline? Yeah, I think you've done. And did you say you had bonds?
I do. I have 2018 bonds on the company, and I'm actually in at $1 as my cost as far as the stock itself, and then I have options.
Wow.
Well, out to 2017, I have $1 calls on it.
That is good thinking. If nothing else, you have covered all bases, and your entry price is very, very low. I like that. You've done a great job. Now, this is it's the second rally it's had in the monthly chart since way back in 2014, April of 2014. And that month failed the very next month, and it kept on going lower down. So this is just the starter position. But I don't think from the action that unless it takes out 140 to 130 as key support, then it could make an arch formation in the weekly chart, take a little time. The doji, 2 doji candles that it made, this is BTU, trading at 263, up 24 cents. Peabody Energy, I think you've hit it right on the button. And the way you've covered it, I love that. You know, a long time ago, I used to do things. I used to get preferred shares and all sorts of things like that. I like the fact that you're covering it in different ways. But more importantly, you've timed it so that your risk reward is really in your favor. If it gets taken out, hey, you are not the stock. You are the person that's trying to participate in the up move. But, you know, it's going to do what it's going to do. But right now, it looks to me like the downside is really done for now, and that at some point, 2 in the 9-period moving average in the weekly chart, that's going to be a test. That's going to maybe be tested. And if it comes down, but if you got the bonds and if you got the stock at 1, you can do. Can I make a suggestion though? I don't. You know, you've got a great methodology here. I'm just going to make a suggestion that says, if you're looking at 263 right now with the height of 270, if it starts to find resistance in the 273 to 282 area and starts to pull back a little bit, that's why you might want to cover a little bit, or maybe if it's options, take a little bit and maybe put that back again a little lower down, only because this is the first big move it's had. And you can see what happened when it had the big move back in February of this year. It went from 591 to 823. That's 43% or something like that gain, and then it gave it all back. I think the chart formation is a little different this time, but it isn't one of the sectors that people are running to, but they could beginning to do that right now. And ACI, another one you mentioned, I would say that it has almost the same pattern, but the rocket ship that it's gone into in the weekly chart is a lot bigger in terms of going from $1 to, oh my goodness, to 10.35. That's incredible. That's 100% gain. No, what am I talking about? 1,000% gain. So I would be a little careful. I would take some profits off and say, hey, spectacular move. Now I want to see a base being built, and then you can go from there. But boy, that was a great entry. I have to congratulate you.
Thank you, Basil, and thanks so much for your help. As always, you're very thorough, and I really appreciate you taking the time to do that. Just have a great day, and I'll talk to you soon, okay?
Thank you. Congratulations. Thank you. That was Brenton Martinez. That was terrific. I mean, nice entry. Got everything you want here. He's got the stock, he's got the bonds, calls, I believe he's got. So it makes participating in a move that's very big is already up 150%. It makes it. He gives him a comfort level, and that I think is the most important thing in the market. Nice. So now we're looking at the coal sector, which was I heard people talking about coal as if it was a done deal, finished. That's it with coal. We'll never see coal rally again. That's always a heads up to say, well, be careful, guys. We could be getting a rally, and that's what you've got. So this is a break coming up. I wanted to go through a couple of other things in a moment, and I'll talk about that when we get back. The Dow's only down 37, S&P is down 586, and I bet I went and changed my entry points for the longs today.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Folks, we're back. Dow's down 52, S&P's down 7. Now, let me just do this. I had a question, a very good question about the S&P monthly. Let me just get this again. What did Julie ask? Julie. S&P monthly wave count. Yeah, so this is the monthly wave count. It's very unusual at highs to get a G. It does happen, but it's kind of unusual. I try to do everything I can to look at to see if I've been correct in my wave count. I must admit that at this particular point, let me just double check if the SPY is the same. SPY is also, yep, SPY is F/B. So the F is exactly what I like. And coincides with many others. I've got G/C, which is the same as the Dow, but the diamonds are E. So the spider and the diamond, the ETFs of the core indexes, the Dow and the S&P, give me the letters that I feel very comfortable with. That's number one. Number two is, you ask me the question, I'll answer the question. The answer to the question is G/C, with every indication so far that it's going to be a G. and that G is the equivalent of an F. In other words, a serious stop because the MACD and stochastic are horrible. The relative strength there, that gray line, is way down. It's at about 58%. And you've got on-balance volume finally making a double top and pulling back. So, and the 9-period moving average is at 2044. So let's just make it real clear. This candle, which closes today, wherever it closes, so far it's really looking like a Chapman wave Roman candle. And it gives you the parameters really, it's clean. A close above 2044 in the next 2 months without taking out the low, or actually even taking out the 1930, call it 1932 to 1928, very important midpoint of that candle, the wick. If it goes above, that would say, you know what, this is going sideways. We've had an incredible rotation with a climax on Monday of an internal low that we should still get within 6 to 8 weeks. We should get the residual low. That residual low could be lower, could be higher. It could be just about a little bit above the previous. It doesn't matter. What will happen is you'll have one of those climaxes going to the downside. And what will happen also is that the news media will be there and everything, and then it will turn around by the end of the day. And that would suggest, at that point, you'll see the technicals having improved. That's the whole thing about the time for the internal low going to the residual. Residual means that you've already made a kind of a, you've already had the earthquake, and now you're getting those aftershocks. All right, let's call it an aftershock. And an aftershock could sometimes be as deep, and sometimes it could be less. And in this case, in the market, it could actually go to even lower lows. So all I'm saying is, I think there's a 6 to 8 week arch formation that's going to form, and that's going to be the test when we come back down. Okay, I hope that's clear. So now let's go through numbers, because you're about to go to the next show. Yeah, very simply, I want to see this week, we haven't even made a leg A in the weekly chart, or a leg B in the daily chart of the Dow. So you need to see the market go 16,670 will start leg B in the daily. And that would also suggest that you got your first A in the weekly. But this is not a brand new buy signal. This is just what I call the gray A underneath the precipice of the Grand Canyon left side sharp cliffs. And therefore, I've drawn in the arch formation. I'm just making it as simple as possible. We have no shorts. No, I shouldn't say that. We are still short the IBB, a core small position, short right from 393. It hit 284, still holding the position we got out of our other shorts, etc., and 347 right now. So I'm expecting this arch to fail, and this is going to be a clue. When the IBB starts on its way down, my suspicion is that we are going to turn down. Now, talk about V-shaped recoveries. Tomorrow we'll get into the V-shaped recovery. Let's see where we close today. Day is young. Remember, until 4 o'clock, the day is young. Hey, thanks for being here. Have a great day. Steve Rhodes at 1 p.m.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.